how to use the bearish CCI indicator on popular divergences like a pro. How to use the bearish CCI indicator on popular divergences like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSCCI Pro traders. And our website is www.dayprotraders.com. The title of the video is how to use the bearish CCI indicator on popular divergences like pro. What is an unpopular divergences? What is an unpopular CCI indicator divergence? Okay. When we are talking about unpopular CCI divergence, we are also talking about unfamiliar CCI divergence. We are talking about an unusual CCI divergence. Divergences that are not popular, that many traders do not know. A divergence that is unique, okay, a divergence that we are talking about for the first time. It is a divergence that is taking place when the speed of the CCI diverges from the speed of the price, okay? The normal divergence, here we have what we call a bullish divergence. You can see that the Goldman Sachs stock has displayed a low followed by a lower low, while the CCI period 14 is displaying a low followed by a higher low. This is a normal bullish divergence, okay? Here we see again that the Goldman Sachs stocks has displayed a high followed by a higher high, but the CCI period 14 has displayed a high followed by a lower high. This is a normal bearish CCI divergence. Today, we want to introduce traders to what we call unpopular CCI bearish divergence. In this case, we are comparing the speed of the CCI indicator to the speed of the price. I want traders to focus on the red vertical line here and also on this red vertical line here. Pay attention carefully, okay? Because this is a new subject. Stay focused, okay? So we can see here I have, I'm going to put another line on my CCI at the level of negative 100 or minus 100. The CCI is oversold when the CCI is below minus 100, okay? So the condition that we are looking for before we can certify that we have an unfamiliar bearish CCI divergence, we want the CCI to deviate, to move far away from the central line, which is the zero line here. So here, pay attention to the vertical line. You can see that the CCI drops down very fast. It went too far. It went all the way to the level of minus 200. Below the level of minus 200. So the first condition, we want the CCI to run fast, to speed up, okay? To go very fast, away, to deviate from the zero lines. Here you see it went too far from the zero line, okay? The next condition, we want the CCI to dip below the level of 100. Here you can see that it dipped below the level of negative 100 and went even to the level of negative 200, minus 200 here. So these are the two conditions. CCI must deviate far away from the zero line and also must be below the level of negative 100. So once the two conditions are verified, we want to compare the speed of the CCI to the speed of the price, which means the deviation of the CCI in comparison to its central line. We want to compare also the price to the corresponding moving average. The role of the CCI period 14 is to compare the price to the moving average period 14. If we were using the CCI period 20, we will place on our chart the moving average 20, because the CCI period 20 is comparing the price to the moving average 20. The CCI period 30 is comparing the price to the moving average 30. So Here we are using the CCI period 14. That's why we place on our chart the moving average 14. So we see that the CCI deviates from the center line, and it is also below the negative 100. At the same time, we want to see whether the interpretation of this deviation of the CCI, it means that the financial asset must also deviate from the corresponding moving average. Here, the moving average 14. But look carefully. Though the CCI period 14 deviates from the center line, the price did not go too far away from the moving average 14. This is what we call, okay, unpopular CCI bearish divergence. When we identify an unpopular CCI divergence, we'll highlight the corresponding support. Which one? Here. You can see where I place the vertical. I see this candle here on a daily chart. That's when the CCI, okay, pay attention, okay, went too far away from the center line, went below the level of negative 100, even went too far to the negative 200. So the two conditions are verified for the CCI. We want to compare whether in normal condition, if the CCI deviates from the center line and also dip below the level of negative 100, the price should also go down far away from the moving average 14. The price should deviate far away from the corresponding moving average. Here, we did not see any deviation of the price. So the speed of the CCI is higher. The speed of the CCI diverges from the speed of the price. The price is slow when the CCI was faster. The opposite is also true sometimes when the price runs faster than the CCI. But we don't want you to get confused. So here we have an unfamiliar CCI bearish divergence because the CCI deviates too far away from the center line, went below the level of negative 100, but the price did not move too far away from the corresponding moving average. In this case, the moving average 14. This is a typical, okay, unpopular or an unfamiliar or an unfamiliar CCI, okay, divergence. Sometimes you may hear me talking about CCI discrepancies. CCI discrepancies are an unfamiliar CCI divergences. Okay, so when I'm talking about CCI discrepancies, I'm talking about unpopular CCI divergences or an unfamiliar CCI divergence. Okay. Here again, if you pay attention here, pay attention to this vertical line, you can see again that the CCI, in fact, went far away. Look at this section here. From the zero line, it dropped down far away from the center line. This is the center line, the red line here. You see, it went below, you deviate from the center line, also dip below. The second condition must dip below the level of negative 100. You see, it went too far, even below the level of negative 200. But the two conditions are the CCI must deviate from the center line and dip below the level of negative 100. That's sufficient for us. You can see here, the CCI ran faster, okay, deviate from the center line, but look, the price did not go too far away from the corresponding moving average. In this case, the moving average 40, there is no deviation. So the speed of the CCI diverges from the speed of the price. Once again, we have what we call unpopular bearish CCI divergence. So how do we trade it? Okay, when we identify, okay, an unpopular CCI bearish divergence, we highlight the corresponding support. So you see where I place the vertical line, the candle that we highlight here, we must place a line below at the low of that candle. That's the first line here. So I'll color it now into pink to get your attention, okay? So first scenario, first trading setup, okay, an unpopular, we have an unpopular bearish CCI divergence here, and we highlight the corresponding support, which is the pink line here. All right, look at the second one here. We are here, the vertical line here. This is the candle, you see, this candle here, and in fact, it's not a candle, it's this one. Or in fact, this one. Okay, pay attention to the vertical line, you see. Pay attention to this one, okay? Look at the CCI, look at the price. The price was here. Am I talking to myself? Are you seeing it? This one. let's move it. We are talking about these candles here. You can see that the price was very close to the moving average 14, but the CCI at that time deviates from the central line and went below the level of a negative 100. Right here, okay? All right? Okay? All right? Okay? So we highlight the low of that candle. That's the corresponding support level. And how do we trade it? We will give priority to bearish signal below that support level. Preferably, we prefer, here there was a good example. You can see that the price D below must D below the support level and try to retest it here. You see this doji here on the daily chart. This is a bearish trade setup. This is not yet the trading signal. We must now use a top-down trading method. Here we are on a daily chart of Goldman Sachs stock, and we have a bearish trade setup, okay, because of Unpopular CCI bearish divergence, okay. So we will use a top-down trading method, so daily chart, hourly chart, 10-minute time frame. There are more to a multiple time frame trading method. There are more to a top-down trading method. So this is one example: daily chart, hourly chart, 10-minute time frame, or a TSCW24 trader. We see the setup like this. We go to the first best time frame for day trading, and we'll use the TSCW24 on the first best time frame, looking for giving priority to bearish signal below the pink line here, below the corresponding support level right here. So do not use the trading setup as a trading signal. Use a top-down trading method, okay? Here again, you can see after this candle, we highlight a low and we want a price. You see here, you see the price after the price D below this level, it went down a little bit. So you want to give priority after you have identified an unpopular CCI divergence. You draw the support level, and as the price D below the support level, preferably D below, retest and turn around, and then you give priority to sell signal. Price going down. The first target is the first and nearest support level, okay? So here it didn't go down very far. There is a kind of support here, and the price did find a support there and change direction. Again, if you look at the second example here, we have unpopular CCI bearish divergence. We highlight the support level. I'm going to color it now into orange, and we want to give priority to sell signal below that support level, because an unpopular CCI bearish divergence is a leading indicator. The CCI is telling us that the price has a high chance to go down more. Because of this unpopular CCI divergence, okay, the price has a high chance to break below the corresponding support level. Here you can see that it did below it, but did not go down very far. So we are waiting after we identify the setup. We must wait for the confirmation. The price must confirm the setup. The price is the #1 indicator and must give us what we call a direct signal before we can enter the trade. If there is no confirmation, if there is no direct signal, we will not enter the trade. We are not trading a CCI indicator, we are trading the price itself. So here, after I draw my orange line here, okay, I'm waiting for a clear cut, okay, sell signal. You can see that it did below it, went down a little bit before pushing it up. So day trader may take advantage of the tail of this candle here, below priority to bearish signal. Price went back above it. Again, you see here, finally, the price confirmed, okay, the divergence, the bearish divergence. So price ran down fast. Okay, so it deviated finally. The deviation that the CCI was telling us, the warning that the CCI was giving us, is finally confirmed here. So the CCI is telling us that the price likely to divert to deviate. The price has a high chance to deviate from the corresponding moving average, but we must wait for confirmation. And here it is, it deviates. You can see now, finally, the price deviates from the corresponding moving average, okay? Here, the deviation was not significant, okay? This is why we say to you, trade the price and do not assume anything. This is about, okay, how to use the bearish CCI indicator, unpopular divergences like a pro. To summarize this video, unpopular CCI bearish divergence or unfamiliar CCI bearish divergence, okay, will take place when the speed of the CCI diverges from the speed of the price. We will highlight the corresponding support level, and we will use a top-down trading method without ignoring the economy news. If you are watching this video for the first time, my recommendation to traders is that, okay, practice first, test it first, okay? It's not because you test it first time it failed that it does not work, okay? Try to master the system. The key here is to highlight, okay, the corresponding support level and to apply a top-down trading method. The unpopular, okay, CCI bearish divergence is a trading setup. It is not a trading signal. All right? I also recommend to traders to watch the previous video that we have recorded that we call how to trade bullish CCI unfamiliar divergences like a pro. This video is now about bearish unpopular CCI divergences. Okay? If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. Okay? But put a comment below why you disagree with us. All right? And if you love it, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, feel free to subscribe to our channel. Okay? Until the next time, enjoy yourself and be very happy. We are the TSCCI Pro traders talking about how to use the bearish CCI indicator unpopular divergences like a pro. Speak to you soon.